Hello and welcome to a brand new show of Market Makers. My guest on the show today believes in 3 simple investment philosophies. Philosophy number 1, benefits of long-term investing. Focus and buy businesses which are predictable and buy companies or businesses which can generate long-term cash flows. Milind Karmarkar, Head of Research with Dalal & Broacha. Milind, it's your first time on ET now, so very warm welcome. Thank you for joining us. Let's first start with your broader assessment of Indian markets. We had a very rewarding September.
Correct.
And in the month of October, things have not moved. Do you think the springtime is over for us?
See, as I discussed earlier also with you, that for me it's very difficult to predict short-term market movements. But having said that, at least in the last 3 decades, what I have seen is that typically Indian markets bottom out at somewhere around a PE of 10 and 12. Now, if one looks back, probably we have already gone through that phase. So I don't see a significant downfall in the market going forward. In the shorter term, yes, there could be some stagnation. But over a medium to long term, I do see the market moving up.
Over the years, I have known you. You've always had a differentiated investment philosophy.
Yes.
You've believed that trading is a zero-sum game.
That's right.
You're a broker. You still believe that?
Yes, we do believe that. In fact, you would be surprised that at Dalal & Broacha, we don't even allow day trading for our retail investors. So our focus has always been for long term. And when I say long term, though it seems as a cliche, but we do believe that long term is anything more than 5 years and could be as long as the business continues to grow.
You have this knack of identifying multi-baggers, and just for the benefit of our viewers, if I may identify 2 stocks which you identified in early 2000, Titan at 40 rupees, Voltas at about 35 rupees.
Yes.
And both these stocks are up. One is up 50 times, the other one is up 20 times.
Okay.
Approximately. It's come down.
Voltas it's come down now, right? That's right.
So, which sector or which theme to your mind will now throw up the next set of multi-baggers?
If you see the last 3 decades, as you rightly said, that every time there is a new theme which comes in, like we had engineering and infrastructure stocks which did very well in the previous boom. What I think is that the increasing per capita income in India could be the theme to look at. And when we are talking of increasing per capita income, it could be banks, it could be pharmaceuticals. But again, what my focus probably would be, it would be something to do with day-to-day consumption. So it could be retail stocks, it could be food, or it could be restaurants as well. So I think that the theme would be consumption. And I do believe that with increasing younger generation coming into earning age, consumption will drive the economy, and of course it will drive the growth of these companies as well.
Some would argue that consumption is a well-discovered theme and most of the consumer stocks are priced to perfection.
Well, when we first talked about Voltas, people said that it is a well-discovered, it was a very old company, it's not a new company. But the key here is that what kind of opportunities is the economy throwing up. So it is true that most of the companies here are not new companies. They are well-established companies. Like for example, in retail we have Trent. Now Trent has been in business for more or less 10 years now. But what we think is that going forward, the growth is yet to come. So we could see a company in retail having $4 to $5 billion turnover in next 10 years.
And according to you, that could be Trent?
It could be Trent, yes.
Which means you're bullish on Trent?
Yes, we are bullish on Trent.
What about valuations? At 1100 rupees, Trent is wildly expensive, no free float, illiquid stock. Does it make sense to buy that stock?
Well, let me put it this way, that if you are a long-term investor, you can buy it anytime. Typically
even at these levels?
See, I'll tell you, typically the way we buy a stock, suppose I like a particular company and it looks expensive with a short-term view, then what I would do is that I would buy the company, maybe 25% of my total expected investment in that company, wait for some time. See, because if I believe that next few years or next 1 or 2 years the company may not show the kind of results which I am expecting, there is a possibility that that stock can come down. So I'd wait for that opportunity and buy some more.
But for the first timers who plan to buy Trent or watching this interview, should they buy their 25% at the current level?
Yes, I think they should. They can buy this stock as well.
Do you have a price target for Trent? When you invest in companies, when you invest in businesses, do you have a price target which keeps on chasing?
No, actually I don't have a price target. The reason is that we are buying into a business, and as I said that I do see some of these businesses, especially in retail, becoming a $4 or $5 billion businesses. Currently Trent is at maybe 1,400 crore turnover. So $4 or $5 billion is a quite a big jump. Now I don't know. I can have my Excel worksheet to show how much profit it's going to make. But having said that, I would rather wait and see. As long as the business is growing, there is no point in selling the stock. So I'll hold on to the stock till such time as I feel that the business is mature now and probably is growing at about 7-8%. At that point of time, I would think of selling the stock.
You've never believed in buying commodity stocks?
No, not really, because I don't understand the cycles in commodities. So that is the reason why I have not been able to buy commodities.
You like Tata Chemicals, that's a commodity stock.
Well, I like Tata Chemicals for different reasons. Tata Chemicals, as you rightly said, is a commodity business. But having said that, the new investments which they are making in all the consumer-centric businesses. Like they have recently started procuring dal from farmers and selling it to other wholesalers. So pulses is one of the major businesses which they are looking at. They have Swatch, they have salt. So I think what they are probably planning, I don't know.
They also have urea and soda ash.
No, they have. But what I think is that those businesses continue to generate a lot of cash, like fertilizers, urea, soda ash. These businesses are generating cash for them. That businesses' cash generation is being utilized for consumer-centric businesses. And since, as you know, that I am bullish on consumption, I think that is the key growth driver for Tata Chemicals going forward. So that is why I am bullish.
So you expect a commodity company or Tata Chemical, which currently is commanding a P multiple of a commodity company, soon could start demanding or commanding a P multiple of a consumer company?
I don't know what is the right or wrong PE multiple, as you said. But yes, what I am looking at is that the growth prospects there are much larger.
25% goes in Trent, 25% goes in Tata Chemicals.
Yes.
How should an investor who genuinely believes in the benefits of long-term investing distribute or allocate the remaining 50%?
It's slightly, complicated in the sense that when I look at portfolio allocations, I believe that in a year, you get only 2-3 ideas, which are excellent ideas where you buy and hold on. And this keeps on repeating year on year. So it's not necessary that once you have invested in stock A, the next year you need to invest in the same stock. But so there are businesses which are good businesses, and if you can identify them, you keep on investing. So when we are talking of 25, 25, 25, 25, what I'm saying is that it's not necessary for you to be invested in these 4 stocks. You could invest in other stocks as well. So what we are talking of is the total capital at your disposal as of now. So we're not talking of a permanent kind of an investment in these 4 or whatever number of stocks you're saying. So yes, 25% in Trent, 25% in Tata Chemicals. I would say that other 2 stocks which probably could be interesting, one of them is Grah Finance, which is into rural housing, and the other, though expensive, would be Bata.
I think Grah Finance is also expensive, 5 times book.
I completely agree. It's wildly expensive. You rightly put it. But having said that, it is growing at more than 24% year on year.
Are you sure it will grow for another 10 years for 20%?
Yes,
20%?
I think more than that as well, because currently they are present in a very few number of states. Their focus is rural housing, where predominantly the maximum number of the increase in income is happening in rural India as well, and there is a lot of demand for rural housing as well. So because of that, I think a 24% year-on-year growth is very easily possible. It's possible, of course, that 1 or 2 quarters it may not happen, somewhere in between. But currently they are only into, if I'm not mistaken, about 8 or 9 states. So going forward, there is a huge opportunity there, and I think they will continue to grow at a significantly higher rate.
But can they withstand competition from an ICICI Bank or HDFC per se, which owns 60% stake?
Yes,
or
that's
for
right.
that matter, any of the other PSU banks?
See, PSU banks' prime focus is on banking and not on housing finance. While as in case of Growth Finance, the focus is completely on giving loans to rural folks for their houses. So because of that, I think that edge will continue to be there. And the opportunity is so huge that even if 4 more players come in, I don't think there is any reason to worry about.
So at 5 times book, if the company is growing at 20%, what kind of a stock appreciation you expect in next 5 years?
Okay, if it's 5 times book, in 3 years time it becomes 2.5 times book. That's first. Second is that there is also a possibility, like what happened in case of HDFC, that the company comes out with a rights issue, or company comes out with maybe a QIP or a private placement or whatever, if they need additional capital. And if that happens, your price to book comes down further. So then the appreciation can be significant. But having said that, if nothing of this happens and if it's on pure growth, I would expect that at least in the next 5 years, because the price is high as of now, still it could double.
Somewhere secretly, are you feeling happy that Titan has been a 50x for you?
Of course. Why shouldn't I be happy? Yes, I am happy. I am happy, but I do wish that the other stocks, which I think will do very well, also appreciate similarly.
Which is one stock you regret buying?
Regret?
Buying.
Yes, there are a few stocks which probably I regret buying, and most of them probably are similar to commodity kind of stocks. So, if you want names, there are like at one point of time I went and bought Pentafor products. I still hold it simply because
hold it.
Yes, the reason is to remind me of the mistake which I had made, and I bought Pentafor at 3,000 rupees. It's currently at 3 rupees. So yes, that's a reminder of my mistake. Similarly, there is one more stock which I had bought at 60 rupees. This was my first purchase in the stock markets, which was Thomas Cook. Again, that point of time I thought that it's a great company, and it's the only company in tourism. And I bought it and I sold it in a span of 3 months because it doubled. And then I went ahead and bought an old Fiat out of the money which I got. And I still regret that, and I still have that contract with me. The only reason why I regret is I sold it too early. It went on to become a 50-bagger. So these type of things even now keep on happening.
So how should our viewers avoid a mistake like Pentafor or a mistake like Thomas Cook?
See, I'll tell you frankly, mistakes keep on happening. It's not that mistakes don't happen in the market, especially if you're close to the market. Mistakes will keep on happening. But the key is to avoid the mistakes as much as possible and focus on your key strengths and work on them, so that even if you make a few mistakes, you don't lose out significantly. So yes, believe in long term, invest, keep investing in the long term, but still once a while you will make that mistake. And I think that will continue to happen.